Hi guys, welcome to part 2 of 5G stock analysis. In this video, I'll be sharing the stock analysis for Qualcomm and answer these 3 questions. Is Qualcomm worth investing in? Is it a buy or a sell at the current price? And finally, is Qualcomm trending up or down from the technical charts? Qualcomm is in the hot 5G market space, and my expectations are quite high for this stock. Their main products are chipsets and processors in the Wi-Fi and RF domain, catering to a wide array of applications such as laptops, mobile phones, and the auto industry, to name a few. I was quite curious to find out more when I saw they were also in the artificial intelligence domain. The AI offers provides added value by understanding the user's behavior for an engaging experience, making the devices smarter and more useful. So let's dive right into the financials and see whether Qualcomm is a buy or a sell. I'll be using the quarterly reports in this stock analysis video. The revenue has been largely flat for the past few quarters and stands at around $5 billion per quarter. There was a one-time jump in income due to reconciling items in Q3 of 2019 where revenue hit a high of $9.6 billion. But the revenue has since come back down to the $5 billion mark. The gross profit is flat as well at slightly below $3 billion per quarter. The gross margin has been hovering around 57%. That is quite a high margin and is a good sign for Qualcomm's top line. Qualcomm is a profitable company and has been producing a consistent operating income. It currently sits at around $800 million per quarter. The net income is looking good too, with a range of $500 million to $900 million for the past 4 quarters. Qualcomm reported a net income of $845 million in the most recent quarter. The net margin is at 17% for the most recent quarter, with the lowest at 9% in the previous quarter. Qualcomm has been investing heavily in research and development. R&D investment has been increasing quarter on quarter and is necessary for Qualcomm to keep its market share. It currently sits at $1.5 billion per quarter. While the R&D is rising, sales and marketing investment is declining. Qualcomm seems to be taking the strategy of investing more in their products through higher R&D, and with a better product, naturally lesser is needed in marketing. Looking through these numbers, I must say that I'm quite disappointed with the flat revenue and profit. I was hoping to see a rising trend, and all that investment in R&D is not resulting in increased revenue. I'm also a bit concerned with such low levels of margins. Qualcomm could easily go into the red if revenue starts to drop. On a per share basis, the earnings per share is at 74 cents for this quarter. The earnings per share have been in the low ranges between 41 cents and 80 cents for the last 4 quarters. That gives an annual earnings per share of $2.37. Due to its profitability, Qualcomm has good positive cash flow from operations. There is a good quarter-on-quarter growth as well when compared to the same quarter from the previous year. Besides investing in R&D, Qualcomm has invested the additional cash into marketable securities. This is a common practice that you will see in profitable tech companies. They have to park that extra cash somewhere, and usually it finds its way to such investments. Qualcomm invested $4.8 billion in marketable securities in the last quarter alone. There is a constant net cash outflow from financing activities as well, mainly due to stock repurchase and dividend payout. Qualcomm has been purchasing its shares consistently, and I like companies that buy back their shares. The share repurchase so far for this financial year amounts to $2.45 billion. Qualcomm has also been giving out dividends consistently. This is another plus. The dividend paid out so far for this FY is $2.1 billion. The payout ratio is quite high and is about the same amount as the net income. Very few tech companies buy back their shares and give out dividends, and I like Qualcomm for this reason. There was also a payment of $326 million for taxes on share settlement. Companies are required to withhold this amount as part of the exercise employees' stock options plan to cover for the tax payment. This amount is paid to the tax authority and recorded as a cash outflow in cash flow statement. At $326 million, that is a huge amount and needs to be noted. Qualcomm has been sitting on a huge pile of cash of $12 billion for the past few years, but the cash flow has since turned negative for the past few quarters, and the cash pile has declined from $12 billion to $6 billion. This is quite worrying. The revenue is flat and the cash position is worsening. They might not be able to continue paying dividends in the future. Now, the change in cash position is evident from the quick ratio that is trending lower. It has dropped from a high of 1.3 in 2019 to 0.77 in the most recent quarter. Minimally, a quick ratio of 1 is preferred. The quick ratio measures the ability of the company to service its short-term financial obligations that need to be serviced within the next 12 months. Qualcomm has a strong balance sheet with low debt, but the assets are declining and the liabilities are starting to increase, and the cash position is declining as well. The long-term debt has been flat at around $13.5 billion but has increased to $15.4 billion in the recent quarter. The increase in the long-term debt and the decline of the overall assets have resulted in the rise of the long-term debt over assets ratio. The book value per share is a mere $2.90 currently. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $113, Qualcomm is trading at a multiple of 38.7 price to book. Let's take a look at the technical analysis. Qualcomm has been trending primarily sideways since 2014 in the $50 to $80 range, but the price has spiked up recently with a big move breaking above the resistance at $90. It has even broken above the $100 psychological level too. This move up is more evident in this daily chart. Usually, such a strong breakout will hold, and the resistance zone will turn from resistance to support. I'm expecting a further upside for Qualcomm, but I would wait for a pullback to around $100 to close the gap and test the support. If the support holds, Qualcomm could head much higher from here. So, is Qualcomm worth investing? It is certainly profitable and has a strong balance sheet, but the profits are on the decline and the book value is heading lower as well. Is it worth it at current prices? It is overpriced at the current levels with a high PE ratio and a very high price to book. Technically, the trend seems to be up, but I would wait for a pullback. Do subscribe to my channel if you have found this sharing useful, and hit that notification bell so that you don't miss out on any of my future videos. Speaking of which, I'll be doing a video on Qorvo next. Qorvo is also another 5G stock, and the financials show that Qorvo might be a better stock compared to Qualcomm. And I'll see you soon in that video.